Good morning, and thanks for joining us here on Condo Solutions. Monday mornings, 9 to 10 o'clock. We talk about things that might impact you and your condo or homeowners association. Some of the things that you may be faced with or may be dealing with in your association, and we're here to help you. My name is Mark Breckville. I'm a local CPA and a licensed community association manager, and have been practicing in this area for about 25 years. Dealing with condos and homeowners associations from an audit, tax, and just general consulting standpoint. But the person that really makes the difference here and has for the last 16 and a half years or so that we've been doing this show, 17 years that we've been doing this show, is our attorney, Peter Mullengarden. Peter's been practicing in this area since Moses came down with the original documents. And so...
Those are hard to amend.
That's right. Those are hard to amend. But anyway, yeah, they were pretty much hard to etched in stone. Set in stone. Yeah, right. So we're here to help you out, to give you whatever help we can. We've got a couple things. One, you can call in 220-9788, 220-WSTU, and Mike will take your call. Give him a name. We don't need your association, and then we'll discuss your problem. We'll try to give you the best answer we can, but as we always say, we don't have your documents, so we can only give you what we call a radio answer, which means that we make it up. No, we don't make it up. It means that we don't have your documents, so we can't give you a hard and fast answer on your particular question. But based on your interpretation of your documents and based on the standard laws and rules and regulations, we can give you as much of an answer as possible. And then if you have something you're going to have to, maybe take to court, or it's going to impact you from that standpoint, then you should
please seek advice of
legal counsel. Yeah, that's right. Yes. Or if you don't have one, call Peter. So
or call me.
Yeah, and then he'll get your documents and help you out. And so that's kind of the get.
I should get my number out. I never get my number.
Yeah, go ahead. That's a good idea.
I say the firm is K. Bender Rembaum, because we don't mention that very often, but it's K. Bender Rembaum. And the number you can reach me is 561-241-4462.
241-4462, 561 area code. So don't forget that. Write it down, and you guys, and then give Peter a call. Speaking of a couple things, speaking of calling your attorney, I noticed there was a question in the paper this weekend relative to should I call my attorney? And and of course the answer right. No, the answer that's right. The answer was but here's it was interesting, Peter, and I'll give you what they said. I'll lay it out and give you what they said, and then you can tell me your thoughts on it. But basically there was a $1,500 contract for some sort of it involved some work on the property, and so they said, at that level, should we really call in our attorney, and I can understand that, because basically you're probably looking at $300 or $400, maybe a third of the contract at least. Depending upon how long the contract is and what's involved and all that. Plus, on something like that, most of the time I would imagine that the attorney's going to have to look at the document, not a para, because that's something where they're actually looking for an opinion on it. And so, they're going to want the attorney to read it. It's like for us on compilations. Technically, a compilation can be done by almost anybody, but the standard says that a CPA has to read it, so anyway, so there's got to be CPA time in there. In your case, there's got to be attorney time in there. So they said, yes, you should send it to the attorney. And the reason they said they made a good point, but I don't think that the answer is necessarily yes. But they said that if the subcontractor isn't adequately insured or doesn't have workers' comp, then you could be looking at a bigger claim. And I think that would kind of assume that the association was not insured. But anyway, that's what they said, because they're, because they may not have workers' comp, and they may, you could be looking at some sort of a larger claim. liability
But
cover.
I'm sorry, but what was the nature of the? Maybe I missed. What was the nature of the claim? You said it was a contract. Was it breach of contract?
No,
was
it was
damages to the property. I'm sorry. What was?
No. They were hiring. They had a contract where they were going to hire a contractor, a subcontractor, to do some maintenance. I don't know what
they were hiring a contractor to do some maintenance. Okay.
Yes. Oh, that's all it was. It was a $1,500 maintenance job is what it was.
And what happened?
Nothing. They were just asking, do we need to send that contract to our attorney?
Oh, do you need to send that contract for review?
Yes.
Is that the point?
Yes. It was a $1,500 job.
Okay. I apologize.
No.
Okay.
And so, do they need to send it to their attorney to the attorney for review?
Well, the thing is, it's hard to say no. Okay. Yeah, the contract would have to be reviewed by an attorney. All right. And what makes it so difficult is, whether the contract is $1,500 or $1.5 million. Okay, there's certain things that could happen with any contract, especially in terms of, will the contractor, through his actions, negligence or otherwise, hurt, cause some injury to someone or cause some damage to some property. In that case, typically you want the contractor to indemnify and hold the association harmless. You do, like you said, you want to make sure there's certain insurance requirements in there. And then, there's a few other things, typically, again, I'm not sitting here that I'm begging for fees, okay? But the problem is you just don't know what's going to happen. So if you say no, the contract's too small, then lo and behold, the $1,500 contract, someone gets hurt, and sues you for, $200,000 or whatever. That's a problem. So generally speaking, contract should be reviewed. I understand there is a practical problem of, you have to watch your, fees and costs and things like that, which is true. Obviously, the larger the contract, the more intense the work, the more chances, that you are going to have injuries, or you have to pay attention to the payment provisions and the release of liens and things like that. So, start time, commencement time, finish time, what's substantial, those are, more involved contracts, obviously.
Mm-hmm.
So I would hesitate just to say no. You kind of have to make a cost benefit analysis, but the big problem is you just don't know, what's going to happen, whether it's a small contract or a bigger contract. Then you also you have to evaluate, what are they doing? What are the chances of, injury, damage, something like that? Concrete restoration, pretty heavy duty work. Other things not so much. So you have to weigh all the factors.
Yeah,
I know that's a kind of a lawyer answer, and you're always saying that I give, the hard and fast answer, but this is one you're really going to have to, take a look at it. What's going on? How long's the job? What's entailed.
Yeah, I think. I know from the business side of it. Of course, one of the problems too is how comfortable you are and your board is with this kind of a situation. For example, if you've got an attorney on the board that maybe does some real estate work or whatever, maybe even if they're not licensed to practice in Florida, they may have at least understand enough of the basics that Peter's just mentioned to know what to look for, know how to evaluate it. They may not know what the laws in Florida are relative to workers' comp or anything else, but they may at least understand that workers' comp could be an issue or general liability could be an issue, and that you want to make sure they're licensed and insured and stuff like that. If you've got
anyone who steps foot on your property is uninterrupted, but anyone who steps foot on your property to do work, yeah, you want to make sure they're insured and they have workers' comp. Okay, just as a baseline.
Yeah.
Whether they're doing a $1,500 contract or the $1.5 million contract.
And the problem with these guys is,
there are certain things that just run across the board that you want to make sure are taken care of.
Right, but the gray area you get if you got a subcontractor that comes in they give you $1 million general liability policy, and they give you a workers' comp policy with coverage, then
Mhm.
that's one thing. What usually gets a little dicey on these things is the subcontractor is self-employed. They've got a workers' comp exemption certificate, and they're going to give you the exemption certificate, and they have liability insurance probably, but um, but they don't have workers' comp. And then typically what happens is the person, something happens to the person. Or typically when you run into problems, something happens to the person, and they all of a sudden can't work anymore, and they realize they can't work anymore, and so all of a sudden they were your employee and they want workers' comp
Well, that's
because
what I mean. That's what I mean. That's where you have to be careful to
right,
ever use those people. Okay,
yeah,
quite frankly, and sometimes they're cheaper. You know, the self-employed exempt
right.
ones.
But they're just starting their business or whatever.
But there's a risk
Yeah.
to doing that.
And you need to make sure your policy covers that risk. So that's
Right.
the other side.
Make sure your policy has some has some coverage. So
Right.
I'm not trying to scare everyone to death, but it's
But
so sometimes you have to you have to be careful there.
and the other thing that you can do is if you give this to your attorney and say review this contract and let me know what you think, well, then expect that to have a bill attached to it that's fairly large.
Yep.
Because at that point, you're asking the attorney to consider all of the ramifications of this thing, regardless of what it is, and point them out to me. And so they're going to have to do that, which means they're going to have to rewrite. They're going to have to read.
Yeah, you could spend $1,000 for your $1,000 contract.
Oh, easy. You could spend $10,000 for your $1,000 contract.
Well, yeah.
I mean, you could. I actually had a situation years ago.
Well, that would be high.
Not in the condo industry, but I had a situation where we were signing a contract when I was a banker. We were signing a contract for our data for our service bureau, for processing our data in those days, and so we were signing a contract. It was a $35,000 contract. It was one that could be renewed at my discretion, at our discretion, but it was 1 year, so that's what we were on the hook for, and so I gave it to my attorney. I was told to give it to my attorney to review and to go in it and see what the problems were. That's what the direction was from the CEO. Now, the law firm was a large law firm, a big one. And so I got that back. I got a revised contract back from them and a bill for $25,000. Now, this is a $35,000 contract. I got a rewritten contract, $25,000 bill. Of course, I gave the rewritten contract to the Service Bureau, and they said, I'm not going to do that. So take it or leave it. So that's one of the things too. You also got to look at,
that does happen. That's true. Sometimes, especially if yes, sometimes you'll write this contract, and with all the protections, and the contractor will say, "What are you kidding?" Or something like that.
Yeah. So this was a good thing that came up because.
Which is a reason. But by the way, which is not a reason not to do it, because just because a contractor is given a hard time doesn't.
Yes, that's a good point. I've had a lot of people tell me, "Oh, this is a standard contract. You can't make changes." Baloney. If it's big enough, you can make changes. They're not going to eagerly make changes, but you can make changes, and there are certain things that you can get them to adjust. Now, if it's a big enough company, they have a policy. We don't change anything. Too bad. But at the same time, I've gone into banks and crossed out of the standard deposit contract. Where you open a bank account. I've crossed out the language that gives them the right of offset. So, because I'm not having that in my document, so I will take that out. That's language that says that if you've got another liability with them or any other activity with them that results in a, even another bank account that overdraws or whatever, that they have the right to go in and take money out of your account, out of your related account, and get that money and pay that loan off or do whatever. So, you just don't want them to do that. You want them to prove that you owed the money. There's probably a reason you weren't paying them. It might not be that you didn't have the cash. It may be that you're trying to that you have a dispute with them. But anyway, so those are the kind of things that you got to look at in the contract. Jim, go ahead.
Good morning. How are you this morning?
Good. How are you?
Hi, Jim.
Nice to have some cooler weather.
Yeah, that's
Yay.
for sure.
Quite refreshing.
Oh, that's what the contract was. It was a $1,500 contract for snow removal, I think. No, go ahead.
Wanted to touch base with you real quick. Our condo association is having their budget meeting this upcoming week, and the board sent out notices to all of the residents with regard to the date, which is this Tuesday. And that was all well and good. However, on the website, they put a different time accidentally on the website. So the budget meeting is Tuesday at 5:30, but the notice on the website said Tuesday at 7 p.m. So some people are contending that it might constitute an illegal meeting because the website has a different time versus the time that was actually sent out via snail mail in the paperwork. They did run it by the association attorney, and the attorney said a simple mistake like that does not warrant, changing and re-notifying and sending out the notice again, re-noticing for 2 weeks. And the board's fine with it, and they're continuing with the meeting on Tuesday. I just wanted to know your take. Is that something that could be challenged, that the budget meeting approval wouldn't really be above board with an illegal meeting?
I don't think that's anyone can challenge anything.
Mm-hmm.
I don't think that's enough to, have the meeting deemed illegal or improper or whatever. I think obviously they should quickly change the website. Okay.
Yes, actually, and they have not done that, even though it was pointed out to them last week.
Well, they should do that.
The notice
they should
on the website still says 7 o'clock, even though they're aware that that was an error, and it has not been changed. Yes.
Well, they should have changed. Well, they should have changed the website.
Uh-huh.
If all the hard copies and the email copies or however they sent it out was correct, I still think at the end of the day, that the meeting is going to be okay, notwithstanding the conflicting website time. I don't know a case top of my head where that would address that.
I mean, if Peter,
but I don't think it's enough to deem the meeting to be improper.
If the documents have specific language relative to how that meeting needs to be noticed, and it doesn't include the website, I don't see how somebody can. I mean, that would be a situation where it could lead to confusion. But I don't see how legally, if you're not responsible for, if the website isn't an official address and isn't an official posting, then I don't see how somebody could be held to that. I mean, if it was just the opposite, if it went out in the letter at if it went out in a letter at one time and then they were changing it to the time that was on the website, then I think
that might be a different story.
Yeah, then you might have more of a problem.
Condo associations are, Jim, yours is over 150 units?
300 units, yeah.
All right, so you are required to have a website. Right. And on the website, you are required to have all the notices,
right.
And you have to have all the notices up for the same amount of time that you have to send them out.
Right.
So there is a legal requirement to have the notice
and actually
on the
website. Of course, the website notice actually went up sooner because everything else went out in the mail. So the website with the error of 7 o'clock was actually up and running a day or 2 or 3 days maybe prior to everybody receiving it in the mail, but it was still within the 2 week per the Florida statute and our governing documents requirement.
Again, I think it'll be okay.
Yeah.
I can't swear in a giant stack of Bibles, but I don't think that type of inadvertent error, when all the paperwork is right, will be a death blow to the meeting.
I would.
But they should have fixed it. But
they should have fixed the website. Yes, and the meeting's tomorrow, so it's.
I would.
Kind of at this point. Yeah.
I would open the meeting, depending upon how bad the budget is. I would open the meeting and then.
Oh, the budget's a good budget. Actually, our quarterly maintenance fees are going down.
Oh, okay. Well, then I would open up the meeting, throw it open for some food and drinks.
Fees going down.
And have a little food and drinks, and then just leave the meeting open, and then don't take any action until after 7 o'clock. So
there you go.
So you can pass it all out. I mean, you actually could just, depending upon how long the meeting was going to be, you could actually, discuss it. As long as there's no vote, I think you'd probably be okay. Mm-hmm. But anyway.
I don't think it'll be that long of a meeting because, as I said, our quarterly maintenance fees are actually going down. The residents are pretty happy with the budget. I can't even foresee maybe that there would be even a big turnout because they're going to give the stamp of approval to the new budget and maintenance fees are down. I think everyone's pretty happy.
Yeah, well, that's interesting because it'll be kind of interesting to see whether down the road costs go down. I haven't seen that happen, so I'm always amazed that we're managing to reduce maintenance fees.
Well, they had
they had a special assessment.
They had an extra charge the previous year.
Yeah, that
was built into the budget. That's been taken care of. So that is no longer a line item. So there was a significant amount of savings on that line item.
Yeah, that's good then. Yeah. Well,
because the prior year it went up to cover this special funding that they needed at that time, and that's no longer in the budget for this year. So they came down. But and believe it or not, most of our contractors kept their prices at the same quotes this year as they did last year.
Wow, that's good.
Almost all our contractors kept their prices the same.
Yeah, I'm more worried about reserves right now, to tell you the truth. But anyway, yeah, that's good then. I mean,
we're putting about 15% each year into the reserves, and we're doing pretty well on the reserve funding right now.
All right. Well, that's good then. So
is there a normal percentage that
no
you've seen in the past that of your overall operating budget should be placed into reserves?
Well, I mean, the Fannie Mae.
Is there a rule of thumb?
Yeah, Fannie Mae and Freddie Mac want to see at least 10%.
Yeah, and we're above that.
Yeah, you're above that.
We're above that.
I want to see some sort of reserve study that indicates the items and funding based on the reserve study is what I would like to see.
Yeah, we do that too.
Yeah, see, now that's good, and that's important for people because, see, if I lived in your community, I'd feel a lot better now because now I know that, okay, my assessment's going down, but I'm putting 15% reserves. I have a reserve study. My calculation is based on my reserve study, so I know that some professional other than, just my board has looked at it and made a determination of costs. And so, I would feel a lot better about that. That the problem I have is a lot of times.
I would be more.
Go ahead.
I'm sorry. No, I would be more concerned not what the percentage is, but where are you in terms of full funding? How close are you?
We've always full funded. Our development's 33 years old. We have full funded since year one. We have right now about $1.2, $1.3 million in reserve.
Fine. I mean, if you're fully funded, okay, that's good. Yeah. I mean, because I wasn't sure what the 15% represented. That's all. Okay.
Yeah.
Yeah, I'll have you give Mike the association's name after you're off the air, so I can write that down because I'm looking for a place to live. So
nobody wants you.
No, nobody wants me. That's true.
I would screen you out. So.
I'm probably prohibited there. But most documents have a requirement that you got to lease. You got to be in it a year. When I've seen documents that say if Mark's going to live there, you have to be in it 5 years, and then before we throw you in jail. So anyway, but no, that sounds good, Jim. That's a pretty good deal. And I don't think there'll be a big problem because the bottom line on all of this stuff is a lot of times you hate to say it, but nothing happens unless somebody complains. And like you say, if the number's going down, and I mean, somebody might complain. Somebody might say, "Oh, it should have gone up," but they're not going to get a lot of support. So,
Right, they will not.
So I
mean, the absolute in anyway, the absolute worst case scenario, which I can't see happening, but whatever, would be you'd have to renotice it and do it again and ratify the budget, which would be just more of a pain as far as postage and whatever.
Mailing costs, whatever.
Yeah, but it really wouldn't create any real liability or anything. You would just have to ratify the budget that you already passed. So.
Well, and
again, I'm not saying that that there should be errors and things like that, because they can just be ratified out. But I don't really see that. Again, like I said before, I don't see it being a problem.
And I would say, as a practical answer to that, Jim, I mean, I was kidding a little bit before, but if this was if I was worried about this, what I would do is call the meeting to order at 5:30. I would see that I had a quorum, and then I would go ahead,
adjourn it to reconvene it.
Adjourn it in an hour and a half, yeah, and then just have a social and kind of talk around. And really, that's what I would do, and then I would I'd re-adjourn it at 7, and everybody's happy. I mean, you met all the requirements. The meeting is still opened up at 7 o'clock. I mean, it opened at 5:30 according to the notice, but it was no action took place between 5:30 and 7. So. And you can do things like that. I mean, especially if it's just a minor thing. A lot of times it's kind of good this time of the year anyway. A lot of people want to get together and just say hi to each other. And it's hard to get the meeting started sometimes just because everybody's trying to, oh, you're back already? Oh, great. Okay. Well, I'm going back up to see my kids, that kind of. So anyway, but so if it was an issue type thing, I would, that's the kind of thing, to be safe rather than renoticing, because that is kind of a pain. I would probably. I think, Peter, you could get away with that, don't you think?
Yeah, because the real issue here again, and I think again, I don't think it really is that much of an issue, but yeah, it would be for people who showed up at 7 saying, "Wait a second, no one's there, the room's empty, dark," and they're like, "Oh, wait, I thought it was at 7 because of the website, and now I'm going to file a complaint."
Right.
Because,
exactly.
But those people at the same time should have received their.
That's right. That's why I'm saying I don't think. Okay, at the end of the day, this is a problem that's really a big problem.
I would tell you that.
Did it cause some confusion? Maybe.
Here's
okay. Now, what someone should do, quite frankly, if they get through the mail 5:30, right, and then for whatever reason they check the website and they see 7. Wouldn't you just contact someone, say, what's the real time?
Story? Right.
Yeah. Well,
yeah. I mean, if you got 2 invitations to a party and one said 7 and one said 5, maybe you'd.
But here's the problem.
What?
That some people will have seen it on the website because he said it was posted on the website first. So some people have seen it on the website, so they say, okay, I got it on my calendar. And when the notice comes in the notice, they don't pay any attention to it. They just
that's true.
They just kind of open it up, say, oh, it's a notice for the meeting. I'm all set. And that's the problem you got. But I don't think it's a big problem.
Well, you can use the Mark excuse for a party.
I'm thinking that's works for me.
Strategy.
That's right.
Or you can just have your meeting and then just kind of see what happens.
Yeah, I think you're good though.
Thank you very much. Love your show. Love calling in with interesting questions that come up from time to time, and it always seems there's always something that comes up that's new that you wouldn't think would be an issue, and all of a sudden it's an issue.
Well, that's true.
That's true. It's 100% true. Thank you, Jim. We appreciate it.
Thanks a lot.
Thanks for the call.
Thank you.
Bye-bye.
Keep listening. Thank you.
So speaking of things coming up, so Peter, I went to speaking.
Do you want me to get the info?
Oh, no, good. Speaking of things coming up, I went to the CIRA conference, right? And I was speaking at the CIRA conference, and we were talking about some things at the CIRA conference. And the big thing at the CIRA conference this year, Peter, is revenue recognition. And I tell you, it's we don't normally get into those kind of topics. Typically, we don't usually get into the accounting topics and all of that. And I always stay away from the whole issues with taxes. But one of the things that I want to mention, and this was the major topic for CPAs that deal with the condos and HOAs, was this whole concept of revenue recognition. And I'm going to mention this. We got a caller, but I'll mention this real quickly because I want to get back to it. If I don't, I want to get back to it by next week if we can. But the way that income is going to be recognized for associations is most likely going to completely change. Your financial statements are not going to look the same. You're not going to be able to find your fund balance anymore for your reserves. You're not going to find that on you're not going to, it's going to be zero. You're going to wonder where all your money went. And there's going to be some significant changes, and it's required. It's GAAP. And right now, that's the requirement, is that the financial statements have to be prepared under U.S. GAAP. So, and I'm going to I'll go into some details as to what's going to change so you'll know what to look for and where to look for. But let's get our caller first. Jerry, go ahead.
Hi, it's Terry. Actually.
Oh, Terry. Oh, okay, Terry. Sorry, go ahead.
So in my condominium, we've had some confusion. There's somebody who's always reading the state statutes, I guess you call them, about the deadlines. This isn't to do with budget, but you guys were talking about the website and notices. And so the woman that I was talking to claimed that the notice of annual, like owner meeting, unit owner meeting, our annual meeting,
right,
that they only had to tell us 14 days in advance, like as a posting thing on our website, but that the election notices that had different deadlines, like 60 days and stuff. So there's some confusion about what are the deadlines for, like, if we have to have our election at the annual meeting, is it 60 days or is it 14 days?
Well, there's two notices. See, that's the thing. This is a condominium, Terry, I'm assuming?
Yeah.
Okay. So for a condominium, as opposed to a homeowner association, but for a condominium, you have two notice requirements. The first notice of the date and time of the annual meeting, date, time, and place of the annual meeting must go out at least 60 days in advance. Okay. That first notice basically is soliciting or asking owners who want to run for the board to submit their intent to be a candidate, because that intent to be a candidate has to be submitted not less than 40 days before the annual meeting, before the election. So that first notice goes out at least 60 days in advance. The second notice by statute, the second notice being if you're going to have an election because you have more candidates than there are vacancies, the second election will have the ballot, and we'll have the ballot return envelopes with it, and that has to go out at least 14 days in advance. Now, some documents do say 30. If they said 30, I would comply with 30, but it can't be more than 30 because between or 35, because when the date to submit your name to be a candidate is not less than 40 days before the meeting. Then you have an additional 5 days if you wish to use it to submit your what's called an information sheet about yourself. Some people call it a resume, bio, whatever, but the technical term is information sheet. So that has to be in by the 35th day before the election, and then subsequently you send out the annual meeting, the second notice of the annual meeting. So there are two notice periods.
So then this first notice at 60 days beforehand is a notice of an election at the annual meeting, right?
Well, it's the notice of basically, this is the date. And
I guess the question was
of our election.
So the argument was that whether or not there was something about there's a requirement for the notice to be posted on the website. That's, I guess, you guys were talking about website notices.
Yes,
so
if you have
that doesn't have to happen 60 days. It's the 14 days beforehand one that has.
Well, all the notices, all the notices go on the website with the same time period prior to when they're supposed to go out to the owners. So I would post a 60-day notice on the website as well. I don't think it would necessarily make your meeting illegal if for some reason it went out to the owners, but didn't get on the website. But you do have to get them out. So
Oh, no, yeah. I guess the real question was that there was disagreement about, okay, 60 days beforehand, everybody gets one, either email or by mail. But
right, and I would post it 60 days in advance too, both. Because the statute says that all the meeting notices that get sent to the owners must be on the website for the same amount of time as they're sent to the owners.
Okay. Okay, because there was some confusion about whether or not that first notice had to be posted on the front page of our website. Or can it just be part of, like, we have a thing where all the notices, you go to this part and click on that, and then.
No, it's fine it's fine if it's. I don't have my thing in front of me, but yeah, it needs to be, on the section
under that section of notices.
Yeah.
Okay.
Mm-hmm.
Okay. So somehow we're having all sorts of weird different deadlines in our condominium thing. It seems like it changes. One year we had a 30-day notice, another year we had a 60-day notice, another year we had a 14-day notice, and it never seems to be the same.
Well, what happens is if, let's say, you send out a 60-day notice and nobody responds to it, or there's nobody that wants to vote or wants to run, and so now you've got a equal number of candidates and positions. So there's not going to be an election. All right. So at that point, there's no info sheet that gets sent out or anything like that has to be accumulated. And at that point, you're just going to send another notice out at 14 days of the annual meeting. But
okay.
See, because
you still have a note, right?
Yeah.
Right.
So you have the 60-day notice. You should always have the 60-day notice because that's an intent. And then that lets people know I can run for the board. But depending upon what response that you have, depending on the response that comes back, if you don't have anybody that wants to run and the elections are uncontested, the person's automatically elected. So you don't have a ballot that you're.
And actually, you know what? I have to make a quick apology. The statute does say, so when I have to go and you have to read it. It says that for your website, it's the notice of any unit owner meeting and the agenda for the meeting as required by 718.112.2D3, no later than 14 days before the meeting. Must be posted on plain view on the front page of the website or on a separate page said notices. So technically, you wouldn't have to put the first notice, the 60-day notice up. I would, but this says it's really the second notice. So interesting.
Yeah.
But,
so you're always going to have a 60-day notice, but if nobody wants to run, then that determines what the rest of the notices would look like. What's going to have to be sent out. I say, if you're not actually having an election because there's an equal number of candidates and positions, then you don't need to send the ballot out. You don't need to.
Then we just have an annual meeting.
You just have an annual meeting, and that's a 14-day notice requirement. Yep. Mm-hmm.
Okay. So, thank you.
Yep. Thanks, Terry. Mm-hmm.
Yeah, it's the 14-day notice. So.
Yeah, it's so. The website stuff is confusing. I do think so.
On the website.
Yeah, because that only applies, I believe, if the question: does it apply to anybody that's got a website, or does it apply only to a association?
No, it only applies to those that have to have the website,
which is over 150 units. So
150 days, 150 units.
Right. So if you have less than 150 units, even if you got a website, you don't have to post any of this stuff. Technically,
you can do whatever. Yeah, theoretically, you do whatever you want.
Right.
But
it's good practice to put it up there, but you don't have to. So somebody can't challenge
it. Yeah, it's the second notice, not the first. So
yeah, okay. But I was getting back to this thing, Peter, and I was gonna, and I'm gonna actually, I'm gonna start meeting with my boards. I should have met with them, and we all should have been meeting with them, but we're trying to wait for the answer before their budget meetings. But here's the things that I want to mention and Peter, I'm sure you're going to get some questions about this because people are probably going to call you and want to, throw the board in jail because they stole all their reserve funds. But so what's happening is, when in the past, for financial statement purposes, you had an assessment, and the assessment had an operating component and a reserve component. The reserve component was going in to fund all of the long-term items that needed to be repaired and replaced, right? So on your financial statements that you got from a CPA that you had to, produce at the end of the year, according to statute, there was an operating fund which showed the money going into the operating fund. It showed it as income, revenue in the operating fund. And then there was a reserve fund, and it showed the reserve contribution going into the reserve revenue. And then you had an income statement. It showed what the money was spent on, and the reserve fund money was spent on reserve items. And then it went down into a fund balance. And so if you had $2 million in your reserves, that at the bottom of your financial statements, when the year was over with, you would have $2 million at the bottom of your, as a part of your, usually as an addition to your income statement, but it would show that the current year income went into your fund balance, and then your fund balance would be shown either on that page on the income statement or on a separate page showing that you had $2 million in that fund. All right. So the revenue was determined based on the number of units times the annual assessment. So if I had 100 units and I had $1,000 a unit, I've got $100,000 in revenue, and that's the number that would show up in your total revenue, $100,000. Well, and then if somebody didn't pay or wasn't able to pay, you would have had in your budget an expense to provide for that, an allowance for bad debts or an allowance for doubtful accounts. You would have had that on your income statement as an expense. So you'd had your income, so your income would still be $100,000, even though 2,000 aren't going to pay. 2 units aren't paying. That's $2,000. You wouldn't put $98,000 of revenue. You would put $100,000 of revenue, and then you would have a $2,000 allowance for bad debts, so that you had raised enough money to cover that. Now, here's what potentially you're going to be looking at, and CPAs have some latitude here. Nobody's telling them what to do, so you may have a lot of differences of opinions, and one CPA may tell you one thing, and another CPA tell you another. But first of all, if you have that same situation, $100,000, 2 units don't pay, $1,000 a piece. Instead of that being in the allowance for doubtful accounts, they're going to show total revenue of $98,000. So the first thing that's going to happen is somebody's going to look at their revenue and they're going to see, wait a minute, we got 100 units and we charge $1,000 a unit. Why isn't that $100,000? What happened to the $2,000? Who didn't put their money in, or where'd that $2,000 go? And why is somebody not being billed? That's going to be the question. Well, they were billed, but you can't record it as revenue until such time as you actually collect it. So that's the first thing that's going to cause a lot of confusion. The second thing is that in the reserve side, that reserve used to be shown as income. So it would go in, and so let's say in the scenario I was talking about, let's say you're putting $15,000 into reserves, 15,000 would show up as reserve revenue, and 85,000 would show up as operating revenue. And then down at the bottom, you'd have your reserve expenses. Let's say this year you didn't have any expenses. You end up with the 15,000 being added to your fund balance, and now you've got 215,000 in your fund balance. So that would have been your fund balance in your equity section of your balance sheet. It would show that you have that money as capital, as equity. Now, there is almost zero justification. The CPAs are trying to find a way to do it so that it doesn't change, but the fact of the matter is they're all coming to the same conclusion. It's going to change. So what's going to happen is that revenue that comes in, that $15,000 that I used in my example for the next 20 years or whatever it is going to sit in deferred revenue. It's going to show up as a liability on the balance sheet. So first of all, it's going to show up as if you owe people money, and you don't. That's your money. It's just not been recognized as income yet. So this $2 million or $200,000, whatever your total reserve balance isn't going to show in your equity section anymore. It's going to show up as a liability as a debt in effect, or as a responsibility to pay or record. And that's going to stay there until the expense is expended. So every year, the only thing that's going to show up on your income statement is a transfer from deferred revenue to revenue for anything that you actually replaced that year. So if you didn't do anything that year, like the example I said, 15,000, you didn't do anything, you won't show any revenue in your reserve section except maybe interest income. and that's it. So people are going to all of a sudden freak out because we got this big liability. We owe somebody $2 million. Why is that? There's no income. What happened to all of our funds? How come I don't see that balance in there anymore? What happened to the money I gave you? Where did it go? And so that's going to be part of the issue here. Is this? It's going to cause a lot of confusion. Now there's a third situation, and this is where I'm kind of leaning towards this. And although I'm in the minority right now to some degree, but although some of the big firms are on my side, so I may be in the minority, but I have a lot of weight behind me. So because I understand, I think McGladrey supports this philosophy, and so does Ernst and Young. So, but there is a third philosophy, and all of this is based on whether you have a contract, and it's all based on when you should recognize this revenue contractually. And so under the scenario that we've been using, the reserve fund money, the concept is that that you recognize that revenue, that you earn all that $100,000 worth of reserve revenue. You earn it all just by accepting the deposit. Well, that's probably not true. I don't think any unit owner is giving you money just to give it to you, and you didn't earn $200,000 or $600,000 just because you've deposited it in a bank account. That doesn't fly, and that's what people are having trouble with. They're trying to tie it into your operating responsibilities, but basically they're having trouble with that. So the idea is, well, I'm giving it to you, it's revenue, but I can't record it as revenue until I've fulfilled my obligation to you as a customer, which is I've improved the roof, or I've put on new balconies, or whatever. So that's the concept for the deferred revenue. It's that you're a customer of the association. You as the member are a customer of the association. And in your contract with the customer, you've agreed to do something, and you don't record that revenue until you do it. Now, the third scenario is that you're not a customer, but you're actually a member. And so what you actually do is you don't pay somebody to do the improvement. You actually give them funds to hold for you until the improvement's done. So what you do is every year the association makes a capital call. Your other members say to you, we have to put money aside for future repairs. So we're asking you to contribute, and we're asking you to contribute money for these repairs now. Make a capital contribution. Now, if that's the case, it's not income at all. It would go, and it would not be deferred revenue. It would actually stay in your fund balance in the equity section, but it would never go through income. It would just show as capital contributions, and when the money's expended, you'd have a schedule of what it was spent on. I think that makes more sense. But we're going to talk about this at a future date, because this is going to be a big deal. This is affecting companies all over the country, not just condos and HOAs. And because condos and HOAs are small, nobody's paying attention to them. So anyway, this is a subject we got to talk about because it's going to get very confusing. So if you've got some board members or others that are out there, financial people, tell them to listen to the show for the next week or two as we discuss this subject, and so we can hopefully get some input and see where we're going from there. But in the meantime, we appreciate you joining us every Monday morning from 9 to 10 o'clock right here on Condo Solutions on WSTU Digital 1450. We are Martin County's Heritage Station.